What's good, wealth builders? It's the man, it's the myth, the wealth builder himself, Devon Put in Work Burke. And today we're talking about the Business Corner recap for July 26th through the 31st. So let's go.
That I'm on my grind is an understatement. Don't think I'm thinking you can check my bank statement. I'm about my money, yeah, that's a basic. World domination is what I'm truly facing.
Before we get started, make sure you subscribe to the channel because we talk about making more money, saving more money, building a better you, and business news. So with that being said, let's talk about the Business Corner recap for July 26th through the 31st. Alright, so let's get into the garbage. The garbage industry, that is. The garbage industry has outperformed the market since 2015. But specifically, we're talking about landfills. Landfills make the majority of their revenue from tipping fees since many private companies have replaced government-owned landfills. The U.S. generates about 239 million metric tons of trash every year. That's about 1,650 pounds per person. The top two privately owned garbage companies are Waste Management, Republic Services, and they're both on the stock market, okay? Together, these two mega waste management companies own 480 landfills out of the 2,600 in the U.S. In 2020, landfills averaged a tipping fee of $53.72 per ton, equating to about $44 million for large landfills just from fees. Companies are always looking for ways to make money out of literal garbage. Landfill mining and gas-to-energy projects are two of the many advancements. Modern waste companies have started using methane gas produced from decaying trash. Experts predict that landfill gas generates about 2.5 billion kilowatts of electricity every year. So you might want to invest in these two stocks. Just saying. Next up, we have Tesla. Okay? Everyone's favorite electric vehicle maker. Tesla reported quarterly earnings on July 25th. The company beat on the top and bottom lines. Earnings $1.45 versus 98 cents per share expected. Revenue $11.98 billion versus $11.30 billion expected. Tesla has not had a great 2021 so far though. Its shares are down almost 7% year to date, and the company has experienced delays in production of new models. But despite those blunders, the company is breaking records. Tesla delivered 200,000 vehicles and achieved an operating margin of 11% for the first time in its history. It also topped $1 billion in profit. Global supply chain issues, aka chip shortages, held back much of the automotive industry, but Tesla's production and software development team kept the company mostly on track. Tesla's production is running as close to full capacity as it possibly can. Tesla is seeing more demand than ever for its electrical vehicles, okay? Not only is that a telltale sign that the company is doing well, but the EV industry as a whole continues to grow in popularity and accessibility. One of the biggest things holding back the EV industry is cost and familiarity. Tesla is working to drive down costs and increase its rate of production. There's some things going on with Tesla. I hope it works out. Next up, we got big earnings for the past week. All right, we got Apple. All right, basically, it does have some supply chains that are coming up, but Apple destroyed Wall Street expectations for the quarter. The company warned that supply constraints could impact the iPhone and iPad for the rest of the year, but earnings per share $1.30 versus $1.01 estimated. Revenue $81.41 billion versus $73.30 billion estimated, and iPhone sales increased 50% on an annual basis. Shares of Apple sank another 2% in its extended trading. Microsoft followed suit, posting a big earnings beat for the quarter. The tech company also beat expectations on Azure revenue growth, a great sign for its cloud business. Revenue jumped 21% year over year in quarter two, Revenue from Missouri, Amazon's competitor, grew 51%. Windows revenue was hit by supply issues. Go figure. Next up, we got Alphabet, aka Google. Alphabet also smashed earnings expectations for the quarter. The company was led by massive growth in its advertising sector. Google's advertising revenue shot up 69% from last year. YouTube revenue was above $7 billion, up 83% from last year. Damn. All right, so let's take a look under the hood. Robinhood, that is. Robinhood made its appearance on the public stock market yesterday under the ticker HOOD, Hood. So how the love it or hate it company do on its first day? Not so hot. Robinhood dropped 10% at one point that day. It raised less than expected in its initial public offering, but recovered that afternoon. It raised nearly $2 billion, selling shares in its IPO at $38 per share. Its opening price valued the company at around $32 billion. Robinhood founders Vlad Tenev and Baju Bhatt each sold about $50 million worth of stock. Well, unlike the majority of IPOs that made their debuts, Robinhood was profitable last year. It generated $7.45 million of net income, but it took a $1.4 billion hit in the first quarter of 2021 due to the GameStop situation. Robinhood is around 18 million brokerage accounts as of quarter one of 2021. And the other companies that compare to them, Fidelity, 36.4 million, Schwab, 32 million, Robinhood, 18 million, and E-Trade, 7.2 million. So there you have it. That's the business recap for week July 26th to the 31st. Thanks for watching. Thanks for subscribing. Thanks for being a wealth builder. If you want stories like this and more, check out the Wealth Builders newsletter. The link is in your description below. Everything will be sent directly to your inbox 4 days a week. Do remember, Wealth Builders, make more, save more, build more.
I'm about my money, yeah, that's basic. World domination is what I'm truly facing.